Earlier today, Pinterest held their very first ever investor day, with the stock rising about 5% and closing about 3% up on the day. More importantly, however, executives outlined a plan to accelerating revenue growth in 2024, following the big slowdown that we've seen in 2022 and in 2023. And in this video, I'm going to be sharing some of my main takeaways and notes from that investor day. So this is going to be somewhat more of an informal call, sharing some of my notes and thoughts around Pinterest's Investor Day. As you know, this is a position I hold. We recently talked about this on the Stock Tank. If you haven't had a chance to take a look at that, you can get the full bull case. I'm selling the bull case essentially to Tanner, and he has some great questions around it. And really how I'm looking at Pinterest right now is as a turnaround play, with the thesis being that as they move into a more shoppable platform in 2024, we can have the chance to see an uptick in the stock because it hasn't really moved year to date. One of the things that we saw in this event was we heard from Pinterest executives ranging from the CEO all the way to their chief product officer, chief content officer, their CFO, all across the board. They had different remarks. So I'm going to start first of all with Bill Ready, Pinterest CEO, who's been with the company for just over a year now, who joined from Google, and earlier to that he was also the CEO of Braintree, Venmo, and he was also an EVP at PayPal. Now, Bill Ready, some really interesting things here in this call. He said we've seen more than 50% increase in click-throughs and saves of buyable items in Q2 and Q3 year over year. The buyable, shoppable items, this is a direction that Pinterest is going in to be more of an e-commerce enablement play, less so of, an ad-based or redirecting you to blogs, social media play, right? Bill Ready added that when a customer sees ads on Pinterest across the funnel, conversion rates are 2x higher than when ads are seen from just one objective. That is the promise of the full funnel finally delivered. He continues to say, we don't need to follow consumers around the internet to know what they're interested in. Advertisers have seen a 45% increase in return on ad spend when using our first-party intent signals. So one of my core bull theses with Pinterest is the fact that they have a higher engagement in their user base. They have a higher intent to purchase in their user base. People go on to Pinterest, primarily women of a certain age demographic and socioeconomic status, over 100K earners. They go onto Pinterest as a shopping platform to discover new products. That discoverability is huge. And how Pinterest makes that money is through those ads, through those redirects, through that enablement of a shopping platform. Bill Ready continues in his remarks, increasing ad load. This is something that they talked about back in March, and I've covered this before. Ad load is basically, what the name describes, how much we can load up a page with ads, how many ads we essentially display. Obviously, the more ads that are displayed, the more monetization, but it's a negative correlation to that user experience, right? You don't want an experience to be full of ads because then that's not a very pleasant experience for you to navigate around that site. So it's a fine balance. The opportunity here that I highlighted that they talked about back in a JP Morgan conference in March of this year, Bill Ready highlighted that they can increase their ad load as much as triple. However, he noted today that increasing ad load can lead to increased engagement. Pinterest is the rare business where interests of users and advertisers are aligned. Our app is now a destination for our users, and it drives more than 80% of our revenue and our engagement. So mobile app is definitely the primary platform for these users, Bill Ready is saying. He's saying they can increase that ad load, which leads to increased revenues. He's saying that advertisers are getting an increase on their return on ad spend, so they're seeing a stickier client overall through Pinterest, which validates that use case. And as a result of all this, they're seeing that 50% increase in click-through rates year over year. All of this is very good because all of this translates to the bottom line. And the last thing, I'll summarize the main thesis of this video. Pinterest CEO earlier today, Bill Ready, highlighted, quote, we believe we will grow revenue in the mid to high teens, this is compound annual growth rate percentage, and improve EBITDA margin to the low 30% range over the next 3 to 5 years. They also mentioned that this quarter, they would come in at the high end of their range, whereas previously they've guided for mid-range. And when I say high end of their range, I mean high single-digit revenue growth. This is something that, with Pinterest, they carried forward a lot of their growth rate. It was pulled forward due to the numbers in 2020. In 2020, everybody was forced to stay home. We saw Pinterest growth rates go, over 100% year over year, 200% year over year. It was ridiculous. As a result of that, 2021, 2022 were negative years or flat. 2023 is, mid to high single digit growth. And now Pinterest CEO basically said through the partnership with Amazon, through the transition of Pinterest onto a more shopping-enabled platform, and that increased intent to purchase from their core demographic, they are going to be accelerating their growth rates into the mid-high teens compound annual growth over the next 3 to 5 years. Now, this is very good because this validates that turnaround play that we have for Pinterest to say that in 2024, on the back of all of this, Pinterest will continue their growth. They mentioned that in 2024, the consensus is for 15% year over year revenue growth. Right now, they're about 8%, something like that. And the EBITDA margin for 22%. One of the main things here is that Amazon partnership. And they did mention that from the testing that they've done in August, they've seen a higher level of engagement. They also mentioned that Amazon ads were the first of many third-party partnerships. So you have to ask yourself, which big name could be next? Obviously, big e-commerce companies, after the initial results that they see with Amazon and the stickiness of this core demographic with Pinterest, will think to themselves, wait a minute, we can get a higher return on advertising spend with Pinterest versus with some other platform. Let's also partner with Pinterest. And so Amazon is essentially that bellwether, is how I see it, where they're that big name in the space that's testing out this pilot program. And now Pinterest is validating that Amazon growth to say we're accelerating our growth rate into 24. This is going to send a signal to all of these other e-commerce companies to say we can get a higher return on our spend through Pinterest than anything else. Some other interesting remarks that I jotted down from that call. Sabrina Ellis, the Chief Product Officer, said in the last 15 months, we've reached new highs in user engagement. The Chief Content Officer says Pinterest is implementing shoppable video across the platform, and video content increased around 170% year over year in Q2. So you can imagine now Pinterest with video, that's even more stickier. You have the retention time of people watching that video as opposed to just static images. So obviously that's going to be pretty big for the advertising space in general, with Pinterest introducing a new medium now to deliver these product offerings. The Pinterest API for conversions is driving 28% of revenue from all advertisers. This is up from 14%, double at the end of 2022. In addition to that, mobile deep linking is driving 235% lift in conversion rates. And more importantly, over 50% of Pinterest users are seeing Pinterest as a place to shop today, and 96% of searches are still unbranded. And I mentioned this on the Stock Tank, the importance of unbranded searches. It means that any small business, SMB, mid-market business can advertise on Pinterest. If I'm searching for, let's say, a chair, I'm not getting results for like a Herman Miller chair or something that's branded. All of the results that I'm getting are mostly unbranded items, which is good because it opens the market. Now, as a result of all of this, I think, one of the big pieces of news is that earlier today, in their investor day, Pinterest authorized a $1 billion stock repurchase program. Obviously very, very bullish because it telegraphs that executives and leadership are confident in Pinterest's growth. Then they believe the stock is today undervalued relative to their prospects. $1 billion stock repurchase program is pretty big considering the market cap. Obviously, all of this is very bullish, and it's refreshing for Pinterest investors like myself, who believe that the bull case around Pinterest is the opportunity to increase the average revenue per user through shopping, through partnerships like Amazon and other third-party partnerships that Pinterest is pursuing and will announce in 2024. The executive leadership team that they have in place right now, I think, is the perfect team, led by Bill Reddy, who has a lot of payments experience, a lot of e-commerce experience. 2024 can be a very, very good year because we finally reverted back to the mean of, we had a blowout year in 2020, and then the subsequent 2 years we're back reverting to the mean I think we can start accelerating from here, validating that turnaround story for Pinterest. And especially because year to date, Pinterest stock, like I mentioned before, is flat. It's only up 8% year to date compared to the NASDAQ, which is about 31% year to date. So there's a big opportunity here in Pinterest to gain steam going into 2024 off the back of a lot of these initiatives based on these initial metrics that we've been seeing. So really bullish results at Pinterest Investor Day. The stock moved up, marginal move up, but I'm really confident in what we're going to be seeing in the company in the next 6 to 12 months. And I do believe that we can have a really good turnaround story on our hands. For right now, this is the Fundamentals Investing Podcast. Thank you so much for listening.